All right, Accounting 2 kids, welcome to 4-3 Work Together. It is going to be a bit of a long lesson today. We have 4 financial statements that we're going to be doing, so let's get down to work right away. Notice that it says we need to open our instructions, so let's see what they have to say here. Again, and I know it's not convenient doing this this way, but we do need our work together for 1 and our work together for 2, which was our adjusted trial balance on our departmental margin statement. We're going to need both of those in order to make our 4 financial statements here. We have a partially completed financial statements given to us in our APLIA, and we're going to round our percentage calculations to the nearest 0.1%. So the first one we're going to do is our income statement, and then we're going to calculate and record the vertical analysis ratios in each amount in the 4th column. So you're going to see here a couple of statements. We're not going to worry about this one until later. And let's open up our income statement and get ready to go from here. So first things first, it gets kind of trippy because they've got their lines all over the place. Oh, we better hide that answer. We can't be looking at our answers right now. Oh my goodness. I think I have that on my other one so we can see. Okay, there we go. So we're going to start with our income statement. As I said, our lines are going to be, oh, they're much better now. Okay, so here you can see our income statement for our company Foley's Interiors. Remember that income statements are for the year ended. So we're going to get to work on this. So remember, we're going to need our net sales and cost of merchandise sold for each of our kitchen and bath departments. So that's going to come from our departmental margin statements, which are our work together for 2. So here you can see we have our net sales amount for our kitchen. So we'll start with that. We'll go back over here. Oops. And net sales was $403,663.03. And our cost of merchandise sold was $190,539. and 6 cents. The difference between those is going to be our gross profit. Now you can either go back over here and get your gross profit amount, or you can do the calculation. Either one is fine, but that's going to be $213,123.97. Our total direct expense amount here is $76,215.20. And so our departmental margin, the difference between those is $136,908.77. Again, you could find that by going here. It's same place, but no big deal. Either one you can do it, or you can do the math. So now we need to flip over and we need to get our bath open. And so we need our net sales for our bath, which is $300,723.95. Oops, $300,723.95. Our cost of merchandise sold, which is $120,747.59. And the difference between those is our gross profit, $179,976.36. Our direct expense amount total was $92,632.57. And so that leaves our departmental margin at $87,343.79. So now all we're going to do is simply add these two together to get our company margin. Since our company is made up of kitchen and bath, we just add these two together and bring that over here. So we take $403,000 plus $300,000, and we end up with $704,386.98. Cost of merchandise sold is $311,286.65. between these two, you can do it either way. You can take 704 minus 311, or you can add these two together. They'll both total the same amount. It should be $393,000. Whoops, $393,100.33. Direct expenses, we add those two together. We get $168,847.77. And so our departmental margin, again, you can take these two subtracted, or you can add those two together. Either one will get you to $224,252.56. So pretty straightforward. We're just copying our information from our departmental margin statement. That's where this information again is coming from. And then we need to go back to our 4-1 work together to get the rest of our expenses. Remember, these are all indirect expenses, ones that cannot be put specifically to a department. So we need to go back and get our credit card fee expense. And this again is coming from 4-1. So credit card fee expense was $4,502.93. Depreciation, $7,250. Depreciation for store was $8,490. Insurance was $15,500. Miscellaneous was $2,813.28. Payroll for administration was $6,149.34. Rent, $18,000. Salary for administration, $71,001.51. Supplies, can find that there, $4,147.89. Utilities, $6,435.07. Oops, and 7 cents. Oh, did I miss one? Oh, I missed uncollectible accounts. That's my fault. Uncollectible accounts is $2,023.85. This just goes to show that with the amount of numbers that we have, we really have to be careful that we are getting the right number and putting it in the right spot, because it's easy to get off track with the amount of numbers that we have. So again, uncollectible account should be $2,023.85. Utilities should be $6,435.71. So then what we do is we total all of our indirect expenses, and I will let you know that that comes down to $146,313.87. That ends up being our total indirect expenses. So what we do is we take our departmental margin, and we subtract out our total indirect expenses, and that's going to be our total company income before we've paid taxes. So when we do that, we get $77,938.69. And then we have to take out our federal income tax. So we go back to our 4-1, we take out our federal income tax expense, which is this $14,749.15. And then that will bring us to our net income for the company when we subtract the $14,000 from our income before income taxes. And that gives us $63,189.54 for our net income for the company. Now, the last thing we need to do, if you look at our instructions again, let me grab those for us real quick, is to do a vertical analysis ratios for each of the amounts in the fourth column. We're only doing the fourth column. Remember that everything is based off of net sales. So net sales is going to be our 100%, 100.0. And then we simply are going to take each of these numbers in the fourth column and divide those by our net sales amount. Okay, so I'm just going to run down these percentages for you. I'm pretty sure you remember how to do this, but just in case, you would take 311,000 divided by 704, and we end up with 44.2%. For direct expenses, we have 55.8. For the direct expense ratio, we have 24.0. Departmental margin is 31.8. Oops, 31.8. And then we come down to total indirect expenses. So remember, only anything that's in column 4. So 146 divided by the 704, we get 20.8. And then for our income before income taxes is 11.1. Federal income tax is 2.1. And our net income is down to 9.0%. So again, just make sure you're rounding to the nearest 0.1% as it says here, so you don't get those mixed up. So that is part 1. We did the income statement in part 1. We'll head over to part 2 to do our next financial statement, which is our statement of stockholder